All right, thanks so much, guys. Elliot Scherer, Managing Director, Head of Sales, CIBC World Markets, joining us today to talk a little bit about a brand new product that was just launched as of yesterday, Elliot, on the NEO Exchange here in Toronto. And we're talking about CDRs. A lot of people are going to be familiar with ADRs. Similar idea here, but good to see you, first of all. Thanks for doing this today, Elliot. Let's get into the idea behind these products and what people can expect with CDRs now here in Canada.
Sure, thanks. Great to be here. So CDRs are a brand new security here issued in Canada that allow for Canadian investors to buy global shares like Amazon.com in Canadian dollars on a Canadian stock exchange while eliminating the risk of currency fluctuations and also eliminating the exchange rate fees for converting. So we believe this innovation can revolutionize the way that Canadians invest in global companies. We're trying to lower the cost, we're trying to reduce the risk, and lower the barrier to entry for Canadians to invest globally. Canadians currently, when they invest globally, they have to do two things. They have to convert their Canadian dollars into US dollars, as an example, and then they buy the stock. So they're in fact making two investments, and you need to get both of them right. And a lot of Canadians learned that in the past year alone, because the Canadian dollar rallied pretty dramatically from July 2020 to May 21, probably 15% or so. So you get a situation where S&P 500 making all-time highs, or your investments in Amazon or Apple are going up, but you're seeing a lot of those gains eroded because of the move against you in currency. So here we're just saying there's been no easy way to protect yourself from those currency moves before, but with CDRs, you can. So there's really three key benefits, Brendan, that I'll talk to you about. The first one is that built-in currency hedge, which was the reason that we put the product together. The second benefit is that they trade in Canadian dollars, so just easier for investors. They don't have to do that conversion. They don't have to deal with managing two sides of their portfolio to track performance. They don't have to deal with the exchange fees. And throughout all of this product, they're getting things at institutional FX rates. So yesterday, as an example, was our first day of trading on AMZN, the CDR, which is under the ticker AMZN. And, bid offer spread was 2 cents, which equates to like an FX spread of like 0.1 or less than 0.1% versus the standard, 1.5% that some people might pay. And then the third benefit is the fractional share ownership. So Amazon was the first ticker that we're using here. And as you know, AMZN in the US trades at about 3,600 or so. I haven't seen what it's trading at today, and I know earnings are out tomorrow. But we launched it at about $22 a share as a 200-to-1 ratio, just to make it a lot easier and accessible for Canadian retail investors. So our hope is that this innovation revolutionizes the way that Canadians invest in global companies. They live in Canada, they earn Canadian dollars, they spend Canadian dollars, so why not have their investments in Canadian dollars too? Yeah,
a lot of keys to focus in on there, and I want to talk about the fractional share ownership, because that is going to be quite attractive for many people who obviously, as you said, $3,000 or pushing a $3,000 stock in Amazon, maybe don't want to invest the capital into the U.S. side of things, but definitely want to have some exposure to an Amazon, to any of the big high-flying tech stocks. Tell us a little bit more about how the fractional share ownership works with the CDRs.
Yeah, so really simple. It's like I was saying, it's a 1 to 200 ratio for the AMZN CDR. But basically, what'll happen is we've I'll call it unitized that in a way so that when Canadians buy and sell, they just buy and sell the CDR, which is the listed security on the NEO Exchange, and they'll get a fraction of the dividend. So if, let's say, Amazon doesn't pay a dividend, but if we're going to do Apple next, and you own an Apple CDR, which, let's just as an example, is 1 to 10 ratio, you'll get 10% of that Apple dividend. So it's not a very complicated product in terms of the fractional share ownership. In the U.S., there are Charles Schwab does a fractional. In Canada, Wealth Simple Trade just did fractional. So that concept isn't overly complicated, but just for everyone's benefit, it just makes it easier and more accessible to Canadian investors.
For those interested, obviously, you mentioned Apple there to come shortly. Why Amazon first? First question. And secondly, maybe let's talk a little bit more about what else is in the pipeline as far as names that are set to make their debut.
Sure. So yeah, Amazon was first. We actually filed our pricing supplement for our first 5 CDRs. So we picked Amazon.com, Apple, Netflix, I heard Google, and Tesla. And those will be the first 5 that we go. But we've been working on this project for 3 years now, and so we're going to be launching many more in the future. And we're going to be basing that on what our clients are asking for. So to the extent that clients want access to other names, we're going to add many more names, and so we'll listen to our clients there. Amazon was a good one to start because of the fractional share ownership, very obvious benefit of 3,500 US a share down to $20 CAD a share. That 200 to 1 ratio really helps drive our message home. So it was an easy one to pick for our first launch.
All right, let's jump into pricing here as well, because people are going to be very curious as to how that is going to work, similar to an ETF product, as you explained to me so clearly. Tell everyone exactly how the actual pricing, with the currency worked in, is calculated.
Yeah, so like ADRs, there's no management fee on these. So CDRs, there's just allowing investors access these companies at institutional FX rates. Currently they're converting their money at 1% or 1.5% here. They don't need to. It's all happening at institutional FX rates because the market maker is the one actually doing the FX conversion. And if you see a bid offer spread of 1 cent or 2 cents, then that's the all-in cost there. And 1 cent divided by a $22 stock price is going to equate to, like I said, like kind of a 0.05% FX spot rate. In terms of like the cost, for managing the currency hedge, that's where we're going to be earning our money. We're very transparent. We disclose this on our prospectus, and we detailed this with the Ontario Securities Commission. And we're not going to earn more than 60 basis points per annum. So that's going to be the call it the drag. And our intention here is to charge the same that we would charge a currency hedged ETF, the same for them, the way that they manage their currency hedge or their currency exposure on their mutual funds or ETFs. That's what we'll kind of apply to the CDRs.
So AMZN trading on the NEO exchange as of yesterday. We talked about a whole bunch of other names, including Apple, to name a few, set to come as well. Elliot, tell us if there are any other plans. Are we going to see some major European names? Are we going to see anything from the Asian Pacific region coming as far as CDRs are concerned?
Nothing like immediately. Our initial intention is to get our anchor tenants to get, as many of these, large blue chip U.S. names on our roster. And we're going to continue to grow again, like listening to our clients to the extent that they want to see Europe and Asia, then that's, where we'll look to grow. And we'll just work with our partners, our custodians, CIBC Mellon and their partners, their sub-custodians, and we'll work with the Ontario Securities Commission to make sure that they're comfortable with whatever regulatory body governs the underlying reference share that we're linking to. So, we got them comfortable, both our partners at NEO, both our partners at CIBC Mellon and the Ontario Securities Commission with the U.S., and we'll have to do the same when we grow to other geographies.
Elliot Scherer, Managing Director, Head of Sales at CIBC World Markets. A pleasure. Thanks for doing this today.
Oh, no. Thanks for having me.
There we go, guys. Now we can buy Amazon shares in Canada with Canadian dollars. AMZN on the NEO exchange, guys.